Hello, good morning. I hope you are all well. We are here again, and today we'll be talking about accounting for production overhead and the cost and management accounting. All right, so I think this is one of the trickiest topics in cost accounting. So I pray you pay keen attention to whatever you're doing. We have some practical examples in this slide, so we'll solve them. I've solved them, so I'll explain them and then we move on. All right. So today we're talking about accounts provide. If this is your first time reaching out to this channel, kindly subscribe to my channel to support me and also like the video and then share it to your friends. You can also give me a comment down there if the video helped you. Thank you very much. If you also have any question, you can also drop it in the comment section. So today we're talking about accounting for overhead. So we've spoken on accounting for labor and also accounting for um material, so or inventory, right? So those are the direct costs, right? Now we are moving on to overhead, which is the aggregate of all indirect costs, right? So the prime cost is the aggregate of direct cost, and then the overhead is the aggregate of all indirect costs. So under this, we are going to talk about the definitions, classification of overheads, methods of accounting for overheads, which is the traditional method, then accounting-based costing, which is the ABC method, then accounting treatment for overhead. So what are overheads? As I made earlier in the intro, overhead is basically the summation of all indirect costs for the production of goods and services. That is indirect material cost, indirect labor cost, and then indirect expenses. So this is the classification overhead. We classify overhead by the function, the behavior, the element, the control. So under function, we have factory overhead, general and administrative overhead, selling and distributive overhead. Then behavior, you can have fixed, variable, and then mixed overhead. Then in element, we have indirect material, indirect labor, and indirect expenses. Then the control, you can have it being controllable and then not controllable. So production and non-production overhead. So production overhead is incurred during production process, whilst non-production overhead is incurred, it's usually to bring the product to a sellable point. So for example, you advertising your product is a non-production overhead, but let's say machine maintenance, lighting and heating, and those kind of stuff become production overhead, whilst advertisement and also delivery, for example, becomes non-production overhead. So approaches for accounting for overheads. So accounting for overheads refers to the procedure used to determine the overhead cost of cost centers and how these costs are charged to cost units. So you have the traditional method and you have the ABC method. So the traditional method is the old one that we normally use. We'll discuss it very soon. And the ABC is also the activity-based one, which include all activities in the organization. So traditional versus the ABC. So for the traditional, one plant-wide overhead rate is being used, and it is easy to implement. Since one overhead rate is being used, it is easy to implement it. And also, it allocates product costs and can be used for external reporting or calculating cost of sales. And then requires one set of books, and then it is less accurate. And then for ABC, it has multiple activity rates, right? So each activity has its rates based on how they've consumed the overhead. And then difficult to implement because you have to go and then check each and every rate, right? And then may allocate period costs and cannot be used for external reports. And it also requires two sets of books. And then it's more accurate because you are going to look out for each and every activity rate. So the source document. So source document for collecting and accumulating overhead costs include purchase invoice, store requisition, wages analysis book, and then the cash book and etc. So now let's talk about the traditional method of accounting for overheads. So traditional method for accounting for overhead. So tracing overhead to cost centers. So basically is the accumulating and an assignment of overhead to cost centers. Then absorption them is charging overhead to product or service. So allotment or allocation of overhead. So allocation is a process by which whole cost items are charged direct to a cost unit or a cost center. Charging to a cost unit the overhead cost that was incurred solely because of the existence of that cost center. So the apportionment of the overhead to is a procedure whereby indirect costs are spread fairly between cost centers. So this is where we share them. Then charging to cost centers its fair share of overhead that were incurred commonly among many cost centers using the appropriate basis, which is referred to as the basis of apportionment. So cost center, we've discussed this already, but let's go. So a place or activity or department that costs are accumulated and charged to cost units passing through it. Then production cost center exists purposely for actual production, example, production department and then packaging department. Then you have service cost center. It exists to render service to the production cost centers, example, maintenance department. So we move to the overhead cost analysis sheet. Right, this is a document that is used to trace overhead to cost centers via allocation and apportionment. So we will tackle some questions. This is an example here where it is in the slide. So I might stop it here and then I will explain it very soon. Then allocated and apportioned overhead cost to service cost centers must be reapportioned to production cost centers which they render service to. So when you apportion overhead to service cost centers, because service cost centers offer service to the production department, you have to reapportion them to the production department, and we will see some very soon. Where service cost centers render service to each other, we what reciprocals, and then there must be what their cost must be considered before reapportioning the cost to the production cost centers. So basis of apportionment, this is what you have to keep in your mind because this is what will help you what apportion the overhead. So the overhead cost, if you have rent, if you have rent, if you have heating, if you have lighting, if you have repairs, if you have depreciation of building, the base of apportionment is the floor area occupied by each cost center. Then if you have depreciation, insurance of plants and plants or equipment, then the base of apportionment is the cost or book value of the plants or equipment. Then when we have personnel, office, canteen, welfare wages, number of employees or labor hours worked in each cost center becomes the basis of apportionment. Now let's look at this question. So IE Limited has 4 cost centers, which is A, B, C being the production cost center, and then X being the service cost center. Remember that a service cost center normally offers service to the production department, right? So the overhead cost during the period are as follows. Rent is this 12,000. Depreciation of plant is 8,400. Light is 1,400. Factory supervision is 21,000. The following information is also available regarding the 4 cost centers, which is the base of apportionment A, B, and C. We have area of square feet, working hours, we have value of plant, we have light points, and we also have service rendered by X, right? So X rendered 40% of his service to A, rendered 25% of its service to B, and then 35% of its service to C, right? So we are going to use this to do the overhead analysis sheet, like we are going to put them on the overhead analysis. So we draw the overhead analysis. Always remember to bring the name and the overhead analysis sheet. And you can bring particulars and also bring basis of apportionment, but at our stage, I think it's not really needed. So particulars is what is the overheads that you encountered in the business. So we have rent. The total amount of rent. So you see, rent wasn't given in bit by bit for each department, but it was given in total, which was 12,000. So rent, remember, the base of apportionment is on the basis of the area of square feet, or look at it here, the base of apportionment for rent is floor area occupied, right? So we have floor area here. So what we are going to do is we are going to add all the square feet, right? So this, so we are going to add this plus this plus this plus this, which is going to give us 2,400. So if you want to get for A, you are going to take 900 all over 2,400 times the rent amount here, right? And you are going to get this 4,500. Then you also, if you want to do for the second one too, you are going to do what? Take 660 all over 2,400 times the same rent figure. Then you get for B, do the same thing for C, and then you do the same thing for X, right? Then now you move on to the depreciation of plants. So depreciation of plants, the base of apportionment is what? The value of plants. So when you add all the value of plants here, you are going to get 840,000, right? So we are going to take 300,000 over 840,000, multiplying the depreciation plants, and then you get for department A. And do the same thing, get department B, do the same thing, get department C, and then do the same thing, get department X. You are going to arrive at the same total when you add all these. All right, so you are going to do the same thing also for C. For light. Light is based on the light point. So we have 40, 50, 40, 30, and then 20, which is going to give us 140. So you take 50 over 140, multiply by the light point, right? And then you arrive at this, and this when you do them individually, right? So we move on to the factor supervision tool. It is based on working hours. So you sum all the working hours and then you get 210,000 hours. So you take this one, 75,000 hours over 210, and multiply by the 21,000. 21,000, yeah, multiply by 21,000. Then you are going to get for this. Then you do the next one, this, you do the next one, this, and you do the next one, this. You know, you're going to get your 21,000 here again as the total, right? So now, remember that the service department normally offers what or render service to the production department. So we have to apportion the total overhead that was what incurred by the service department. So the total overhead was 5,900, which was incurred by the service department. So first, we add all the overheads for departments A, B, C, and then X. Then we share the X overhead among the production department. And the production department was 5,900. So we are going to share it among production departments A, B, and C on this basis of 40%, 25%, and 30%. So you just find the first one is 40%. 40% of 5,900 is going to give us this. Then 25% of 5,900 is going to give us this. And then now 35% of 5,900 is going to give us this. And then we are apportioning based on this. So we put the one that we are apportioning into brackets, which means that we are sharing it. It's negative. We are subtracting it. right? So now this is what we come and get as the total overhead for production department A, B, and then C. All right. In case you don't understand anything, you can put it in the comment section. I'll come and explain further. So we also have, in the case of reapportionment. So in the case of reapportionment, we have repeated distribution methods. So the reapportionment is more or less like maybe you have two service departments who offers service to themselves also, right? So when you are reapportioning, right, you will see that, let's say there was another department which was Y. So X, Y, you see that the Y will also be offering service to production department X. So with that one, you reapportion and reapportion onto the total, the value that is left under the service department becomes irrelevant, like they become so small. So you apportion Y, you get something for X, and then you reapportion that to everyone again, then you get something for Y, then you reapportion Y's onto everyone again, then you get something for X, until the value becomes so small that you can't even reapportion, whichever will be according to. So we'll look at an example very soon. So we have two methods. We have the redistribution method. We also have what? The algebra method or the simultaneous equation method. We are going to do all this here. So overhead of the cost centers are apportioned to both production and service cost center over and over until the amount of overhead is left insignificant, right? So this, and then the algebra method, this method determines a cost equation for each service cost center and then solves this equation by conventional simultaneous equation. So let's look at this example. D Limited comprises of 3 production departments and 2 service departments. Data below gives the overhead cost allocated to each of these departments. They say we should determine the total overhead cost for the production cost centers, right? But now we have 2 service centers, and we're only looking for the total overhead for the production centers. So we are going to do this. So the following are the cost of service department. The following overhead cost of the service department should be apportioned as follows. So service department D, you have to apportion it on the basis of 15%, 20%, 30%, and then 15% on E. And then service E also 45%, 0 for B, and then 25% for C, and then 30% for D, right? So let's first start with the redistribution method. So as usual, delimited word analysis sheet. And then our first listing was for overhead for production department, it was 12,200, 8,400, 7,750, 600, and then 200. We have a total of this, right? So here is it. All right. So now we are now going to what? Distribute the service department onto the production department A, B, and then C. So uh, let's start from department D, right? We are distributing D. So with D, we are going to find what coming. All right, so we are going to apportion based on this basis of apportionment. Remember to always include the basis of apportionment in here, right? The reason why I didn't add it here is because the space wasn't enough for me, right? So we were apportioning it on the basis of 15%, 20%, 30%, and then 15%. So we do the same thing here. We did the same thing here. So when we find 15% of 600, we are going to get 90. 20% of this, we are going to get 120. 30%, we are going to get 180. And then 15%, we are going to get 90 again, right? So now after apportioning the service department, now we are going to what? Reapportion the apportion the service department D. Now we move on and then add them up. So we add and then get a total of this, total of this, total of this, and then a total of this, right? Now we move on and then now apportion production department E, all on the other way. So we also use the same basis of apportionment, 45% on A, 25% on C, and then 30% on D. That's what we are going to do, the same thing here. So we are going to get 130.5, 72.5, and then 87, right? After everything, we also had another figure for service department B. So we have to reapportion it again. So we are going to do the same thing. And then after that one also, we also have what? A figure for production department E. So we have to reapportion everything again. And then now we came and then ended up, I ended here, 3.92. I see this one to be significant. But you can continue until you get 0 point something. All right. So you can see that in total, our overhead cost is going to be just this total plus this apportion. So it's going to be 12,439 for this A, 8,537.4 for B, then 8,031.86 for what? C. So that's going to be our overhead for this department. All right, so now let's move on to the simultaneous equation. So for the simultaneous equation, what we are going to do is that first, we let department D represent, let's say, X, and then department E represent Y, right? So let's come here and then look at something. So it is so easy for a reapportionment is time consuming, but for the simultaneous equation, it's so easy. So you see, you have 600 under D. You have 600 and you have 30% here, right? So you just bring the same thing here. 600 plus 30% of Y for department D. Then, because department D will be sharing towards department E, right? If in case of sharing to be given to service department E. So you are going to represent Y here. Then here too, okay, so 200 and then 15%. So we are just going to bring it here. 200 plus 15% of X, which is the service department D. So here 600 plus 0.3Y, and then here 200 plus 0.15X, right? So this, so you just look here, just look at it here, and then take a 600 plus 30% of X, and then 600 plus 30% of a 200 plus 15% of what? Y. Then you move on. So now, with how we do our normal simultaneous equation, we either use elimination method or substitution. So Yeah, I'm using substitution method. So with substitution method, I put equation 2 into equation 1, which is equation 2 here into equation 1. And then doing everything, I came and then arrived at x being 691.10. And I put that same thing into what? Equation 2, right? When I put it into equation 2, I get y to be equal to 203.67. So now, after getting this x and y, remember, x is for production department D, and then y is for production department E, right? So you bring them on the overhead analysis sheet again. You apportion the 619 here, 619 on the production department A, B, C, and then E again, right? That's what you are going to do. You apportion it using this same basis of apportionment. This same basis of apportionment, right? Using this same basis of apportionment, the first one, then you are going to get this. So 15% for A, 20% for B, 30% for C, and then 15% for E. That's the same thing. Then we move on to apportioning production service department E, where that one is also 45% of A, dash for B, then 25% for C, then 0.3% for D. So at the end, you will see that the production department D will tend to 0 after reapportion, and then the production department E also will tend to 0. You see that this one is simple. You only did 1, 2, 3, and then you are done. But for the other one, you redo it and redo it and redo it. So me, any day, anyhow, I'm going to choose the simultaneous equation method. In case you don't understand, we are always in school. You can come and then I'll give you for further explanation, or you can also drop a comment and then I'll enhance the understanding. All right, so this is it for this question. Then we move on. So absorption of overhead is a process whereby cost allocated, and so we've already spoken about this. So overhead are usually added to costs using predetermined overhead absorption rate, which is calculated using budgeted amount. It involves the computation of overhead absorption rate, which is OAR, for each production cost centers and assigning or absorbing overhead of cost centers to the product or cost units. So with this one, we are now coming to compute in a situation where we have the overhead absorption rate. So estimate the overhead likely to be incurred during the period, and also estimate the activity level for the period, right? So our overhead absorption rate of cost center is going to be the total budgeted overhead, the total estimated overhead, all over the total absorption base for the cost center. So look at it here. It is on the basis of units produced. If it is on the basis of units produced, then it is what? Total budgeted overhead all over the units produced, right? We will solve an example very soon. Total budgeted overhead all over the units produced. Then on hourly basis, we have the direct labor hours and then the direct machine hours. So direct labor hours is just going to be total budgeted overhead over direct labor hours. Then machine hours is also going to be total budgeted overhead over total machine hours. Then percentage cost basis too, we have direct material cost percentage, which is basically total overhead all over direct material cost times 100, because it is some percentage, so times 100%. Direct labor cost percentage will also be total overhead all over direct labor cost times 100%. Then prime cost will also be the prime cost, total budgeted overhead all over the prime cost times 100%. Remember, the prime cost is for the addition of the direct material cost and then the direct labor cost. So we have blanket overhead absorption rates. An absorption rate used throughout a factory and for all jobs units of output, irrespective of departments in which they were produced. So departmental overhead absorption rate is a separate absorption rate used for each cost center department. So this is an illustration we have here. The following data relates to production cost center. Calculate the appropriate overhead absorption rate. So we are coming to, since we have unit produce, production units, we are going to produce the total machine one. We're also going to produce the calculate this and this. So just to kill time. So these days I'll be solving the questions before I'll come and then explain so that I wouldn't be wasting my time or the video won't be long. So first we start with direct labor overhead absorption rate. This is basically total overhead all over total direct work hours. So total overhead in this question is 12,000, right? And then total direct work hours is 1,600 hours, right? So when we are going to get 7.5 direct labor hours per direct labor hours. So 7.5 per direct labor hours. Now we go to the machine hour overhead absorption, which is basically the total overhead all over the total machine hours. So in the question, total overhead was 12,000. Total machine hours is for 24,000, 2,400. So we do the same thing, and then we get what 5 per production, 5 per production. Then we move on to the direct material cost percentage. The direct material cost percentage is basically total overhead, all over direct material times 100%. And the total overhead is 12,000, and then the direct material cost is 6,000. So we do it and we get 200%. Now we move on to the direct wages cost overhead. Total overhead all over direct wages times 100%. Total overhead is 12,000, and then direct wages is 3,200 times 100 times 100%, and then we are going to get 775%. So you see, direct wages is 3,200. Overhead is what? 12,000. And we get it, right? Then we do our prime cost. Remember, prime cost, total overhead over prime cost times 100%. This is the prime cost percentage. So remember, prime cost is also what? Direct material plus direct labor. And then it is 3,200 plus 6,000. This is what we get when we compute for everything. Then now we do for our total output rate. Our total output rate is the total overhead over units produced. Then in the question, 90 units was produced. So total overhead, which is 12,000 over the units produced, we are going to get this 133.33 per unit, right? So that is basically it up to this point. Now let's move on. Now, assigning or absorbing overhead to cost unit. So this is done by multiplying the overhead absorption rate by the actual number of absorption days, the base of absorption used in the period of production. Right? Overhead absorbed is what? The overhead absorption rate times the actual number of the absorption days utilized. So look at the question. This is just a follow-up from the previous question already. So assuming in producing product X, direct material cost is 2,000. Direct wages was 5,000. Using the overhead absorption calculated above, determine the overhead to be charged to X, and hence the cost of producing X if overhead is absorbed on the basis of direct wages. So they are telling you on the basis of direct wages. So we are going to allocate our overhead on the basis of direct wages, right? So remember, On direct wages cost percentage, we had 375%, right? So we are going to multiply that 375% by the direct wage. So on the basis of direct wage, 375% times 5,000, which was given in the question, as our direct wage, which was paid, right? So times this one is going to give us our overhead, because that's what they are using as the basis of absorption. So we do that and then we get what 18,750. That is our overhead. Now, remember total cost is what? Direct material plus direct labor plus overhead, or prime cost plus overhead. So in the question, they gave us the direct labor to be 5,000, then direct material to be 2,000. So direct labor being 5,000, direct material 2,000, and then our overhead we just computed is what 18,750. So when we add, or we are going to get what our total cost. So the answer for this question is we determine the overhead to be charged, and hence the cost of producing product X. So the cost of producing product X is 25,750. That's it, simple. So because in case they tell you on the basis of direct material, then you are going to charge the overhead on direct material. But since they are telling you on the direct wages, then you are going to use or apportion it on the basis of direct wages. What you are just going to do is you are going to multiply the absorption rate that you had by your particular, maybe if wages or material, what the material or the wages amount that has been given to you in the question. That's what you are going to multiply it, and then you are done with it. So you see, it's very, very simple. So predetermined overhead rate, both total overhead cost of cost center and the total of the production base is predetermined. Like we assume them, we estimate them. Why? Because there is delay in charging overhead, seasonal demand, management choice in sharing common costs, and no basis for cost control. So accounting treatment for over and under absorption of overhead. So basically, it's more or less like what we do in our normal accounting. If you are expected to charge a particular expense and then you overcharge it, right? And then later you find out that you've overcharged it. Then you what? You treat the difference as what? An income, right? It will be added back to the profit. The difference will be added back to the profit. But in case you what? Undercharged, then you subtract the difference from the profit. That's the same thing we are coming to do. So over absorption results if overhead absorbed or charged to production by cost of sales is greater than the actual overhead. If it is higher than it, then it means that it has what reduced profit. So you check the difference and then add it back to the profit. But in case of under absorption, where overhead is undercharged, you check the difference and then what you subtract it from your profit. So actual overhead costs are different from budgeted. So actual activities, so over and under absorption overhead are treated as period costs, meaning that they are charged to the profit or loss account. So under absorption, so when you under absorb or you undercharge, then you deduct it from profit, which becomes what as an additional expense. So you debit the income statement, then you credit the production overhead. Then over you add back to the profit, you add the difference back to the profit as overhead overcharge profit. So you are going to debit the production overhead and credit to the income statement. Now we move on to the activity-based costing, which includes everything in organization, right? So emergence, let's just look at some briefly. So traditional systems were appropriate when direct costs were dominant and indirect costs were relatively small. There was a limited range of products. There was a limited range of products that was produced and lack of intense global competition. Traditional cost system use volume-based absorption base, basis, but if volume bases are not the cause of indirect costs reported, cost will be misleading. So Cooper and Kaplan suggested that it was not products but activities that determine the level of overhead cost. Activities such as ordering materials, repairing broken machinery. So why ABC or activity-based costing? The reason is the cost contribution to cost units on the basis of benefits received from indirect activities. That is ordering, setting up, and then assuring quality. ABC system calculate the cost of individual activities and assign cost objects or units on the basis of activities undertaken to produce each product. So each and every activity that has been undertaken is what they are going to charge. They don't just spread anything, right? So it is ordinarily used as a supplement to rather than as a replacement for the company usual traditional listing. So we don't replace it. We are just adding it as a supplement. So ABC, so activities. So these are some of the stuff you'll be using. So activities. Activities is an aggregate, is an aggregation of many different tasks, events, or units of work within specific purpose that with a specific purpose that cause the consumption of resources. Example, placing purchase order, setting up of machinery, etc. Then cost drivers. Any factor which cause a change in the cost of an activity. That is the activity that generates the cost. Then have the cost pool. It's a bucket that, or is a what um, accumulation or addition of different costs related to a different allocation base, sorry. A group of costs having the same cost driver or grouping of individual cost items. So types of cost drivers, you have transactional or transaction driver, a simple count of the number of times that an activity occurs. Then this is the least accurate type of activity measure cost. And duration driver measures the amount of time needed to perform an activity. This is more accurate than transaction driver, but it takes more effort to record. We have resource cost driver. It is also a measure of quantity of resource consumed by the activity. It is used to assign the cost of a resource to an activity or cost pool. Activity cost driver measures the frequency and intensity of demand placed on the activity by cost objects. It is used for assigning activity cost to cost objects consuming the activity. So these are all just self-explanatory. So identifying, so ABC method for account provider. So first you have to identify the cost pool of each activity cost center. So an example will come soon. So allocate and apportion the overhead to cost centers and also determine the cost pool of each activity. Then we absorb the overhead to cost units. So determine the cost driver rate CDR for each activity and charging overhead to product service on the using of the CDR rate which has been determined. So you see the CDR rate basically looks like the overhead absorption rate, right? But here, each and every department will be having its different overheads, right? So for the traditional one overhead will be given for all the departments. But for the ABC, each and every department will be having their overhead absorption rate. So that will be used for the CDR. So total cost, so here total cost, the CDR formula is total cost pool of the activity cost center divided by total cost driver of the activity. So ABC assign both manufacturing and non-manufacturing costs to products. Traditional costs assign only manufacturing costs to products. So ABC system do not assign all manufacturing costs to products, while traditional costs uh, assign a system do assign all manufacturing costs to products. It is one of the differences. Then another one is ABC uses more cost pools than traditional cost system that often use a simple plant-wide overhead pool or just one overhead pool per department. So ABC uses more allocation basis than traditional cost systems, which rely solely on volume as the base for allocating overhead costs. So designing an ABC system, you have to identify major activities that take place in an organization. The activities chosen should be at a reasonable level of aggregation based on benefits, on cost and benefit criteria, choice of activity influenced by the total cost of activity, and the ability of a single cost driver to provide a satisfactory determinant of the cost of the activity. Right. Then we also want assign cost to the pools. Let's see something, an example will come very soon. So look at something. Remember that they told us that ABC is not a replacement for the normal distance, but it's what as a backup something. So here is the traditional overhead. So using the traditional overhead, they had 110, 120, 130. So the production overhead was on the basis of direct labor hours. So that's why they had the same 30, 40, and 50 for them. Right. Now let's move on to the ABC system. So the ABC system has a different rate. So here is the quantity produced or sold units, 10,000 for product P, 10,000 for product R, and then 20,000 for product R, and then 30,000 for product XS. So the company wishes to introduce the ABC and has identified two major cost pools for production overhead and their associated cost drivers. Information on these activity cost pools and their drivers is given below. So information on this activity cost pools and their drivers. So basically, the activity cost pool is receiving and inspecting quality assurance, which has the cost driver of the pitches requisition, and then the cost associated with the activities of 1.4 million euros. Then production scheduling or machine setup, which is which has a cost driver of what number of batches, and then one has a cost of 1.2 million. So further relevant information here is that number of purchase requisition is what 1,200 for P, 1,800 for R, and then 2,000 for S. The number of setups for P is 240, for R is 260, and then for S is 300. So from the information given, let's calculate the what activity-based production of product P, R, and S. Also comment on the difference between the original standard cost and the activity-based cost. So basically, this is it. So if you want to get, remember, in the normal traditional one, it's for total over the actual cost base, right? So here too, we are in a position to move to, okay. So the CDR rate is going to be what? The is going to be the cost, the total cost for the receiving and inspecting all over the inspecting quality assurance, right? So inspecting quality assurance all right, sorry for the lag. Someone called me. So as I was saying, it is more or less like the way we were doing the normal overhead absorption rate. So now the cost driver for the the total cost for the receiving and inspecting was based on purchase requisition. So purchase requisition here, we have a total amount of what 1.4 million, and then we have number of purchase requisitions here. So for us to get its CDR, we are going to add all this. We are going to add all this 1,200, 1,800, and 2,000. Then we are going to arrive at what? 5,000. So we divide that 5,000. So we divide, it is going to be 1.4 million divided by 5,000. So that was what happened here when they had 280 per purchase requisition, right? Then here too is what? Number of batches, and it is based on number of setups, which we have here. We are also going to add all these, giving us 800. So we are going to add 240 plus 260 plus 300, giving us 800. Then we are going to divide it by each total cost. So we are going to get 1,500 per setup. So now we come and then repeat we want to analyze our full overhead. So our overhead will be based, our normal direct material is in here. Normal direct labor is also in here. Right now, our production overhead is what we are looking for. So you see the material is already here. The material, the direct costs are already here. So for that one, we leave it like that. So for the overhead is what we are looking out for. So receiving an inspection quality, right? It is going to be the CDR rate times each of the distance. So CDR rate times this divided by the quantity of units produced by product P. So if doing for P, you are going to do the CDR rate times 1,200 over 10,000. So that's the same thing here. CDR rate times 1,200 over 10,000. Then you get for product P. You do the same thing for product R, which is going to be the CDR rate times 1,800 divided by each unit produced, which was the 20,000 units. Then you get this. Then you do the next one too for product S, 280 times 2,000 divided by the units produced. You get this. That's the first overhead you get for the receiving and inspection or quality assurance. Then now we come to the production scheduling. So we also multiply its CDR rate, right? 1,500 by its this thing, its number of setups. So times 240 divided by the units produced. So times 240 divided by the unit for product B. You do the same thing for product R, the same thing for product S. Then we are going to arrive at this, this, and this. Right. So now when you add all this, your total cost is going to be this 149. It's going to be 124. So you adding the production overhead to the direct material and the prime cost, the overhead to the prime cost, you're going to get 149.6 here. You are going to get 124.7 here. You are going to get 113.66 here. Right. So when we are comparing to the first one, the ABC method, after doing our overhead, we had 110, 120, and 130. So you can see that the traditional one was underestimated the cost, right? It's underestimated the cost here, and it's also what underestimated the cost here, and it's what overestimated the cost here, right? So you can see from here, first one was 110, and the ABC had 149.6. Then second one is 120, then and the ABC had 124. Then third one is 130, and then under the traditional we had 130. So you can see the inconsistencies. Yes. So this is an example. You can also try out. I'll try and then solve it to make the video short. I'll solve it and then I'll also drop the video very soon. Thank you very much for your time. And this course or this comes to the end of this session. If you find this video helpful, kindly like it and also share it to your friends. Thank you very much. See you some other time. Bye.